I asked you what my next video should be about and you voted for Starbucks, so here we are. Starbucks stocks is flat year to date, underperforming the S&P 500. And Starbucks stock reported an EPS of $0.9, missing analyst estimations by a small amount. Revenue was reported at $9.43 billion, also missing the analyst estimations. But people love Starbucks stock for different reasons, and one of them is the dividend, and I understand why with dividend yield at 2.45% and 13 years of consecutive increases. And if we look at the total returns in the past 5 years, we see that Starbucks stock massively underperforms the S&P 500, and this is including dividends. So could this be the perfect time to buy Starbucks stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. And more importantly, which price target is the most justified in my opinion. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Starbucks do? Starbucks is the most widely recognized coffee chain brand in the world, operating stores across more than 80 countries. And if we dive in the most recent earnings report, we see that revenue was reported at $9.4 billion, up 8% year over year. And to me, this looks really good. North America represents 75% of the total revenue. The international segment 20% and channel development represents 5%. For Starbucks, it's very easy to generate more revenue by just opening new stores. However, you want the existing stores to grow as well. So it's very important that comparable sales stores is growing. In here we see the US grew by 5%, which is a decent number. The international segment grew 7%, while China grew 10%. To me, this looks pretty good. Operating margin increased 130 bps year over year. And again, this looks really good to me. EPS grew 20% and global store count grew 7%. All numbers look pretty solid. Another interesting thing is that in the US, 3.6 billion cards were reached and more than 34 million active users. And for the full year guidance, Starbucks expects to report a comparable sales growth of 4 to 6% in the US and low single digit for China. New store growth is expected to grow 7% globally, with the US sitting at 4%. However, China is expected to grow 13%, so they are heavily expanding in China. And revenue is expected to grow between 7 and 10%, which is an insane number of course for a company this size. Operating margin is expected to expand as well. I would love to see some numbers here, but unfortunately Starbucks doesn't provide us with any details. EPS is expected to grow between 15 to 20%, which is also looking really good. And if we dive in these specific segments, we see that North America is still increasing a decent amount in revenue, 9% year over year. What I really like is the operating margin. It's increasing at a high pace. In here we see the international segment. Revenue is also increasing at a high pace with 10%. However, operating margin is decreasing, and this is something that I don't like of course. Channel development is the smallest channel and unfortunately both revenue and operating margin are decreasing. And now that we know a bit more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Starbucks stock is a 106 billion market cap company. PE ratio is at 23, indicating they could be overvalued right now. Later in this video I will show you my 3 price targets for Starbucks stock, so make sure to watch until the end. And in the meantime, please let me know your thoughts on the current valuation on Starbucks. and I'm also interested to hear your thoughts in general on this company. Revenue is at 35 billion, and in this graph we see that revenue went up at a pretty steady and consistent pace. Of course we see the impact during the lockdown periods. Margins are going up in the long run, and this is really important to me. However, it's not a really steady and consistent pattern. EPS is looking pretty good in the long run, it's going up. The only thing is that I do prefer a bit more steady and pattern here as well. Analysts expected EPS will increase at a high pace, around 18% per year. It's expected they will reach a range of $7.4 to $8 in 2028. For the revenue, analysts expect also pretty high numbers. On average, you're looking at 10% growth per year, and it is expected to reach 55 billion in 2028. Return on assets is sitting at 9.5%, which is a great number. Return on equity looks really bad, but the most important number, return on invested capital, is sitting at 70%, which is a really great number. It is also higher versus the 5-year average, which is a good thing. Current ratio is at 0.78, which is a decent number. Nothing really special to mention here, to be honest. Right now, SBUX has 24 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. SBUX has 3.4 billion in total cash, so they can't pay down all their debt, and this is something that I don't like. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run. However, it is again not really steady and consistent. We also see the impact during the lockdown periods. Shares outstanding are decreasing, which is something that I really like. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 2.45%, which is a great number. Annual payout is at $2.28 and payout ratio is around 60%. I prefer 50% or lower, so right now they have 40% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at almost 10%, which is a great number. On top of that, they increased the dividends for 13 years in a row. And if you take a look at these numbers, the dividends paid since 2012, you see that SBUX did increase the dividends at a high pace. However, most recently, growth is starting to slow down a bit. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that payout ratio is really steady and consistent, around 50 to 60%. I would prefer 50% or lower, but I'm okay with the current situation. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course, this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase at a higher rate versus previous years. Overall, these dividends look really good to me, but how about the historical returns? I decided to compare SBUX stock with the overall market, in this case the S&P 500. Next to that I added Dutch Bros, another coffee chain company. On the 5-year chart we see that SBUX underperformed the S&P 500 big time, with only 46% return, and this is including dividends. The S&P 500 returned 95% and Dutch Bros returned minus 25%. On the 1-year chart things look pretty interesting, with SBUX sitting at minus 11%, while Dutch Bros is sitting at minus 30%. The S&P 500 is sitting at a 24% return. On the 6-month chart it is again SBUX that is having a negative return. This time it's almost minus 5%, while the S&P 500 is beating them again with 14% return. On the 1-month chart it is finally SBUX having a positive return, with a whopping 0.56%. However, the S&P 500 beats them again with 5% return. So bottom line, Starbucks was beaten in the long run and in the short run by the S&P 500. So could this be the perfect time to buy Starbucks stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 6, 8 and 10%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 11, 12 and 13%. For the free cash flow margin I'm putting in the same numbers. For the PE ratio I'm putting in 20, 22 and 24. For the price to free cash flow I'm putting in the same numbers again. In my opinion, Starbucks has a big moat, so I'm willing to pay a premium for that. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now, Starbucks stock is around $93. I hit analyze and we see a lot of red numbers. We have a low price target of $63. We have a mid price target of $85 and we have a high price target of $114. To me, the high price target is the most justified here, meaning the stock is undervalued based on these numbers. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on Starbucks is that I love the company and I start to like the stock even more lately. Starbucks was one of the bigger stocks in my portfolio. However, the fair valuation wasn't always quite there in the past couple of quarters, and it felt that I could get a better deal. Now with the stock price coming down in the past few months, I think this could be a great opportunity to pick up some shares. Most fundamentals look good, and Starbucks is capable of growing at a high pace. Especially with China opening up again, we see rapid growth there. From a dividend point of view, things also look really good. The only downside I see is that growth is slowing down, a little bit here, which is not a good sign. From a value point of view, things also look pretty decent. I don't think Starbucks is massively undervalued, but it looks pretty interesting right now. I'm picking up a few shares right now and I hope the stock price will fall down even more from here, so I can buy shares at lower prices. But remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.